Well, 10-year Treasury futures trading today, perhaps one of the busiest days we've seen in a long while. Very volatile with a 17 basis point range. I believe the tone was set late afternoon yesterday when Powell hosed down inflation concerns, and that spilled over into the Asian session. Saw like Australian 10-year yields up 12 basis points on the day. Their stock markets were up. Even the carryover in Europe was substantial. We saw the 10-year Bund in Germany at a one-year high yield of negative 0.229. So going into the U.S. session, risk off ever so slightly. Then came the data. Data was dour overall. I mean, have to say, continuing claims, jobless claims both beat expectations. That's good. On the other hand, the components of durable goods, especially consumption, fourth quarter GDP, were written lower. Midday, we had this 7-year auction, and really just a bad auction, to put it bluntly. It was actually the largest tail ever recorded for that auction, with a 4.2 basis point tail. The auction just was not received as people thought, and then from that we just saw a risk-off mode with stocks going lower. We saw metals lower, copper, oil actually went down as well. So it was a very strange day, but really a lot of it was triggered by that 7-year auction and people starting to question that reopen and reflation narrative all the more. That said, CME Group's CVOL tools show that implied vols are up quite a bit. When talking about activity, option volatility and activity was far higher than the average over 10-year or 10-day period. That said, what's peculiar right now, what's pointing out to traders, is that there's a high volume of out-of-the-money call buying and out-of-the-money put buying, so putting a little convexity smile into the curve, where a lot of people think that that skew should be to the call, actually seeing some put buying as well.